Welcome, everyone. We are glad that you've joined us this morning. Hello, I'm Megan Troxell, and I'm pleased to be able to introduce our speakers for today. Hopefully they are familiar faces to many of you. Few logistical items before we begin. There will be 5 polling questions throughout the presentation today that you'll need to answer to receive your CPE credit. And then your CPE certificate will be emailed to you in about a week. So to introduce our speakers, first we have Jason Hardy. He has over 15 years of experience and is well-versed in the nonprofit world through both his professional experience as well as his service to nonprofits that he has a personal connection to. We also have Robin Ryan as one of our presenters. She has over 25 years of experience, and similar to Jason, she has service to nonprofits both professionally and personally. So enjoy the presentation that we have today. We have lots of information that will be helpful, and I'll turn it over to our presenters now.
All right, thank you, Megan. So what we're going to be talking about today is 2020 and how it has impacted us personally, professionally, and from an accounting world perspective. So we're going to be mainly talking about audit considerations related to government funding, including single audits, but also just all different forms of funding that may be new to certain organizations during 2020, since so much was changing and volatile during the year. So we use this slide because we probably all feel like 2020 hit us like a semi-truck and maybe backed over us once or twice. We had the other slide we thought we might use as a dumpster fire, and I think either one of them would have been appropriate in this case. So not that we need to recap too much of what happened in 2020, because I'm sure it's fresh in everybody's minds, but it's been a year of challenges, both from a personal and professional perspective for many reasons, and hopefully we've all learned to be resilient and flexible during this time, and I think many of us can see the light at the end of the tunnel with the situation in a number of different aspects. While our personal and professional lives have been a challenge, the world of accounting is no different, and it has not stopped, and there's many new developments on a number of fronts, from funding to compliance and numerous other aspects that require our analysis and attention this year, and those are the things that we're going to be talking about today. Government funding is one of the many aspects of accounting and the nonprofit world that has changed, and today we'll be discussing audit considerations related to those new government funding sources, including the impacts of new funding sources on single audits potentially. No aspect of life was spared from the upheaval resulting from the pandemic. Some of us have been able to continue to work in our offices with our coworkers, while some of us have required working from home or a combination of the two. Our work lives, home lives, mental and physical states have all been impacted. Our economy wasn't spared, as it's also been impacted, and we'll likely be feeling the effects of that for many years to come. Beginning last spring, the government began to take efforts to provide relief to businesses, organizations, and individuals alike through the CARES Act and a number of other programs that were enacted during the year. The accounting for which is what we'll be discussing today. Every company and organization has responded differently to the pandemic, some being impacted more than others. While the relief has kept many organizations afloat during a stressful and uncertain time, the operations of many of our organizations have changed in a major way, whether it be where we do our work, how we do our work, spending controls and limitations, internal control changes due to remote work, or cash flow concerns. From an administrative perspective, our organizations have had to deal with the health and personal side of things, making some owners or directors feel like they needed to be disease experts just to run an office, combined with trying to make PPE available to employees and dealing with paid time off for employees that may have been affected by the virus. Operationally, we've dealt with multiple shutdowns and openings, spikes in cases, and in many cases, remote work that resulted. Having to work remotely is not as simple as it may sound, as it required a lot of ingenuity and in some cases, hardware or software support that needed to be funded by the companies or organizations. This remote work environment is likely something that is here to stay in some capacity for many organizations. From a financial perspective, funding for some organizations has been compressed. Many organizations that relied on foundations or individual contributions may have seen a drop in funding as unemployment increased and your donor pool dealt with their own personal financial insecurity. At the same time, most organizations tried to reduce expenses. However, this was a challenge because certain expenditures could not be modified either due to the needing to continue your mission or to qualify for forgiveness under certain federal funding programs. Almost everyone has been feeling a pinch in some form or fashion this year. And in some cases, to make up for the funding shortfalls, various government programs have come into play, which have worked as a safety net in many cases, but have not always been easy to apply for or to understand for many organizations that are unfamiliar with federal funding. Additionally, while the PPP loans got most of the publicity during 2020 and into 2021, there were many other government programs that were also available this year. And Robin's going to go into more detail on the various funding sources that you may have seen this year and the important factors that organizations should be considering from a reporting and compliance perspective. Robin?
Thank you, Jason. So again, Jason has alluded to, and a lot of this conversation today is going to be revolving around the governmental funding that was available. But while some foundations cut back on contributions related to programs, there were other foundations that frankly, how should I put this? They reallocated the way money was being provided to organizations. So with the foundation grants, it's a little different than governmental, but you do, of course, need to evaluate, and Jason will talk a little bit more about this later, whatever restrictions, if any, were put on grants that they were providing to you. In some instances, what they did is they released restrictions on grants that had been previously awarded, and you were therefore allowed to use it for operations. So foundation money is in its own right an interesting dynamic. Individual contributions, certain instances they decreased, but in other instances there would be people that were very focused on organizations that they had previously supported and wanted to make sure that those organizations were able to continue their mission. And I think before I go to a discussion on the actual COVID-related federal funding, Carissa's going to give us a polling question. Well, those results actually aren't, they are probably what I would have expected to see, certainly in line with the PPP. So if we start with, and of course I'm talking and being in charge of the slides at the same time, and it's seemingly not working. Hold on a second. Let me see if this works. Okay, so the COVID-related federal funding, there were actually 6, and 3 of them on this slide and 3 on the next, programs that were passed to address some of the concerns related to COVID-19. And if you can see, the first 3 of them all passed in March of 2020. Again, I think I had on one of the slides, we've written fast and furious. These bills were passed. There were parameters, it's hard whenever you're reacting to something to be able to sort of effectively address all of the questions that the people had. So, again, people were doing the best that they could, but I'm sure all of you found that, in fact, it seemed to be a bouncy ball in terms of what you needed to do to apply, what you needed to do with the money, and then, of course, now you're going to see the back end of it with how you're going to report it. These next 3 acts, the Paycheck Protection Program, of course, the CRRSAA Act, which was passed in December, and the one that was most recently passed, the American Rescue Plan Act of 2021, also known as ARPA. That particular act, again, it was recently passed, so it allowed for additional funding for many of the programs that had previously been set up, but the flip side of it is some of the specifics related to those programs, again, have not yet been established. So if you're receiving funding under ARPA, recognize, again, back to my bouncy ball comment, you could see some changes over the next couple months. Just as a reminder, the purpose of this program is not to go into detail for each of these particular acts and the money that was available. It's really more high level to address some of the impacts or potential impacts to our nonprofit organizations related to this funding, so that you can start to think about whether or not you could have reporting requirements related to the money that you receive that you are not aware of. So if we talk about general guidance, first thing we want to do is, again, if you're receiving government funding, and if you have never received government funding before, or you have received more than you would normally receive in the past, one of the things you want to keep in mind, this is the big sort of overarching umbrella, is when a non-federal entity, in this particular instance, we're going to talk about primarily about nonprofits, when you expend more than $750,000 of federal awards in a single year, a single audit is required. Now, remember, and Jason, make sure you, if I'm wrong on this, but I think I'm right, it doesn't have to be one program, 750. You could have 4 programs that together total 750. So if you're sort of thinking, oh no, none of them came to that amount, you need to add up all of the funding to see if you came up with the $750,000, again, in expenditures. So if you received revenues and for whatever reason, not all of the expenses have occurred, you're looking at the expenditure number, not the amount that came in, for purposes of the single audit. And just a reminder for those of you, again, who may not have been through a single audit process, the single audit sits on top of your financial statement audit. So you have a regular financial statement audit, generally annually, and but if you have programs that are federally funded and you have this 750 threshold that you've met, you have to have an additional audit that essentially relates to the programs. So if you have multiple programs, we evaluate for what they call major programs, and so you're looking at things such as whether or not what expenses are allowed, which were allowable. Did you, in fact, the cost and the money that went out, did it meet what's permitted by the terms of the federal award? There are actually, I think, 11 different things that are monitored when you're looking at a single audit. Probably the most important things that people think about is, were we allowed to spend this money in this way, and are we reporting it the right way? So that sort of is the high-level version of a single audit for those of you who may not have had one. What happens is every year, the Office of Management and Budget, the OMB, they issue what's called a compliance supplement. Now, the compliance supplement is actually geared toward the auditor, and we have nothing else to do other than read a 1,700-page PDF, which is at best dry. But anyway, the compliance supplement is geared toward the auditor because we would be the ones providing, the audit of the grant or the award. But it's not a bad idea, if you are in fact receiving federal funding, to take a look at that compliance supplement yourself to see if in fact, what you're doing, what you were supposed to. So the compliance supplement came out last August, as it would normally come out. But needless to say, it didn't cover all of the funding that came with COVID-19, simply because of the timing of it takes to prepare a $1,700-page document. And when the when the guidance came out, and again, as I said, there were a lot of changes and a lot of people asking questions and fine-tuning the expectations. So what happened in December of 2020 is an addendum to the August 2020 compliance supplement was issued. That particular addendum provided additional guidance for programs that had money, expenditures specifically related to the COVID-19 awards that essentially are determined to be a major program. So the compliance supplement itself, relatively detailed. It talks about 8 new COVID-19 funded programs, so programs specifically identified as COVID-19. 6 programs had COVID-19 funding, so the requirements and the responsibilities related to those programs were amended, and then there was a new non-COVID-19 program. So they detail that information. They also provide a matrix where they list each of the programs, and then they go through the 11 different reporting requirements and the items that are looked at in terms of a single audit, and then it's a yes, no. And just as an FYI, we have added at the back of this particular slide presentation links to, if you would like to download the compliance supplement, the addendum, that is all available for you. Now, one of the things that the compliance supplement addressed, in addition to the matrix and the different programs, is it provided additional extensions for single audit due dates. And normally, the single audit is due within 30 days after you issue the single, up to the federal clearinghouse. You have to submit your single audit to what's called the federal clearinghouse. And normally, it's 30 days after the issuance of the single audit, and it's normally due by March 30th, right, Jason? Well, they extended those due dates obviously last year because of really just the frenzy that was going on in terms of trying to be operational and in terms of getting the money in terms of attempting to account for it. So the addendum specifically addressed single audit due dates. It also talked about the donation of personal protective equipment, or PPE. And I do have to tell a little funny story. Last year I was talking to one of my clients. We were doing interim work, and I said, okay, send me your PPP information, or your PPE information. And she's like, I don't even know what that is. And I'm like talking to her, well, here, to me, PPE is, property, plant, and equipment. That is normally what it is. Well, PPE came up with a new thought process to a lot of people last year because it was personal protective equipment. So I was a little bit embarrassed at my sort of lack of comprehension as to what certain organizations were going through. But anyway, the addendum specifically stated the donated PPE, while it goes on to the SEPA as a separate line, it is not considered to be subject to a single audit. So if you very nicely had somebody donate to you $1 million worth of PPE, you would list it, but you don't have to worry about meeting any auditing requirements to that.
Assuming it came from a federal source, that's the only way it would end up on the SEPA.
Right. Now, the other thing that the compliance supplement specified, and I'm going to stress this, and I'm sure Jason will as well, is that the money that comes from these federal sources is coming from different departments, whether it's Health and Human Services, Department of Education, Department of Transportation, Treasury. It's coming from a lot of places. And while the compliance supplement is addressing single audit requirements, a lot of the nuances of these particular awards they're not addressed as part of the compliance supplement. So you do need to, if you have received funding, to be sure that you go back to the specific agency to look and see what information they are posting related to this information. So for example, if you received money through the, and it's going to come back to me here in a second, I'm going to be talking about the Provider Relief Fund, which was a lot of that relates to money for healthcare providers. Well, you have to go to the Department of Health and Human Services for a number of reasons. First of all, you have to go through their portal. If you receive money through the SVOG grant, this Shuttered Venues grant, which is passed through ARPA, go to the SBA website, and then there's going to be frequently asked questions. You want to make sure you download all of that information and look at it to see, what possibly you may have missed, or what something you're not even sure, you don't know what you don't know, and you realize, oh, I need to be thinking about that.
Thank you, Robin. We have a participant question actually that I think kind of applies in this section. The question was, does the $750,000 apply to both grants and contracts, or just grants?
It would be both.
It'd be both.
Yeah, you'd be considering both reimbursable contract-based, federal funds, or things, amounts that are contributed from the federal government. And again, it's based on, like Robin said, expenditures as opposed to cash received. It's dependent upon when you use the money. But in most cases, if you receive $750 or more, you probably have also used it. There's usually not that year lag or anything like that, but that is a good question. Yeah.
Yeah, thank you for that question. One of the things, the problems that have come up over this last year, the challenges to even understanding what you need to do is, number one, not all funding is subject to the single audit requirements. We're going to cover that in a second. And also, some of the funding that came through the government was then transferred to the states or to local governments. So you may have received an award through the state or through your local municipality, and you may not even recognize the fact that it could be subject to the single audit requirement. If you've never received this type of funding before, the fact that on this piece of paper it has CFDA 8127, by the way, I made that number up, I don't know if that's a real program, that's not going to mean anything to you if you've never seen it. So this potential trickle-down impact of where the money has come from is, something we want you to be aware of, and, we want you to take into consideration. So we're going to talk about the easy programs first, and that would be some Sba Administered Loans. The first thing we want to cover is the Paycheck Protection Loan, and the good news for all of you, or those of you that took the PPP loan, is that it was decided that this money is specifically not subject to the single audit requirement. So if you received $768,000, $1 million, whatever, that money you don't have to worry about single audit issues. Now, you do have other things you need to be concerned about, and Jason will cover the forgiveness in the second half of the program. But as far as receiving that money, it's not subject to single audit. And this was one of the programs. There was a lot of concern in the beginning of when these were awarded. Is it going to be related, cause a single audit? Frankly, there's been a lot of concerns in the for-profit community in terms of the income tax ramifications. There was a lot of back and forth on this one, but that was the final decision. Then there's the emergency disaster loans, the EIDL program. And interestingly enough, this is another one where, in doing my research, I read one thing that said they're subject to it, one thing that said they are not. I think what you're going to need to do, again, is look at, if you've received one of these loans, although none of the people on here said they got an EIDL loan. So, but if you know somebody that received one of those loans, they'll again, need to look at the documentation if they hit that 750 and see whether or not it would be subject to single audit considerations. Other funding, and again, ERC, nobody indicated that they'd received the employee retention credit on our poll. Last year, when the ERC was originally introduced with PPP, it tended to be an either or. If you got paycheck protection money, you could not do ERC. Well, with the passage of ARPA, things changed, because then you could go back and you could actually evaluate your situation from the prior year, and certainly in 2021 as well. And based on some, whether or not you were forced to be shut down, depending on some revenue considerations, you could in fact also apply to the employee retention credit. And the way this works, if somebody has chosen to do that, is you would get a refund of payroll. If you're using 2020 information, you would file your 941s, amended 941s. You would get some or all of your payroll taxes back. And going forward, if you qualify in 2021, it would go right on the 941 as well. So again, it doesn't look like that was a big issue for this crowd, but if you have any, if you've been hearing about it and people are talking about it, you want to see if in fact you could potentially benefit from the employee retention credit, please let us know. We will put you in touch with the people at the firm that could address that.
And Brian, before you move on, to keep us in line with polls, I'm going to fire off the second one, but feel free to keep talking.
Oh, no, do the second poll. I need a break.
Sip of water.
Okay, so we have 46% of you that have applied for forgiveness and presumably have received forgiveness. The whole PPP forgiveness program, that's been another bouncy ball, to say the least, because when people came back after Christmas and they were ready to start applying, then the PPP round 2 came about, and then the bank shut down the review of the application. So we know there's been some challenges with PPP. So go ahead, Carissa, close that. Or I close it, I guess. Or do you close it?
You can close it.
Okay. All right. So we're going to talk next, again, once I find the mouse, about 3 programs. These particular programs that I'm going to cover very, very, very quickly were the ones that received the most commentary in terms of the impact to some nonprofits and the single audit. The first one is the Provider Relief Fund. This particular, the money for this particular program was designed to help hospitals and other healthcare providers. It was to be used to cover supporting expenses, such as all of the personal protective equipment that had to be purchased, or revamping, hospital rooms so that they were negative pressure. Also used for things like supporting your staff because of clearly the challenges that hospital staff experienced. It was also used to be used to cover lost revenues due to COVID-19. So when they shut the operating rooms down, or even something as simple as having a colonoscopy, they shut those offices down for a few weeks. People were able to go through the Provider Relief Fund to receive some reimbursement there. And while this probably to some people think, well, I don't know if this applies to me, we're not a hospital, we're not a doctor's office, but if, let's say, for example, you run multiple programs, and one of the programs that you run is possibly like a skilled nursing facility, those particular organizations could have received money through this program. Even so, don't automatically, if there's any chance that you have a healthcare related services that you provide, you want to ensure if you received any funding that you evaluate this. The one thing they did last year is, again, normally you would report this money when it's expended, but last year they sort of put a hold on the expectation that people would report that on their CFA for, let's say your year was ended 6/30/2020 or 9/30/2020. I think they took and decided that with all of what was going on, accumulating the costs and how to manage that, may have been a little much for some people when they were finishing their year-end information last year. So for the most part, some of what should be taken into consideration in the current year will be any funds received in 2020, and possibly even in a fiscal year that was not the current one. So assuming you're a 6/30 year end, 6/30/21 year end, and you had received funding maybe between April and 6/30 of 2020, that money does have to be considered for the CFA this year.
And for those unfamiliar, the CFA is the Schedule of Expended Federal Awards. So if you haven't had a single audit, you might not know what the CFA is, but that's essentially just a list of which programs you received funds from. And I think Robin referred to earlier a CFDA number, and that's essentially the indicator of what government program or branch that money came from. And that's where you would look up that CFDA number in the compliance supplement, and that would give you the compliance requirements that you have to meet and any restrictions on the use of those funds. But if your organization hasn't had a single audit before, and you do have communications from funding sources that have that CFDA number included, that should be your first indication that, hey, this could be a single audit item. And hopefully for your sake, it's under the $750,000 and you don't have to go through the extra process, but it's at least worth investigating. And
also with the Provider Relief money, if you received over $10,000, so, okay, we're not talking the $750, we're talking $10,000, which isn't very much money. The Health and Human Services organization, they have a portal, and you are required to report that funding through this portal. And then I know that at the beginning of the year, it was to open, I think, January 15th. As of February, the middle of February, it hadn't been opened. I'm assuming now those glitches have been addressed. So remember, if you've received even over $10,000 of funding under this program, you at minimum have to look at the Health and Human Services portal and report it there. And then the money through the portal, then if in fact it's over the $750, you have to make sure that what you reported on the portal matches what you're going to be reporting as part of your single audit. And then another interesting fact here is for-profit entities, in fact, they are subject to some audit requirements. So whether it's a single audit, a program audit, but they're not going to be off the hook if they receive this federal funding. The Education Stabilization Fund, this was a really, boy, when you look at these numbers, the CARES Act appropriated $30.75 billion to this program. The Act in December added another $81.9 million. There were actually 10 subsections to this Act. Now, the HERF money, the HERF and HERF2, higher education, has probably received the most publicity, but money through this program was being used in a multitude of different ways, whether it was elementary schools trying to get kids who were homeless, because of course a lot of times the schools feed people in underserved communities. So there was money going into a lot of different places here, a lot of different buckets, workforce development, trying to get people off the ground in terms of kids learning online, that type of thing. So, and then there was a whole bunch of money that went to what they called the Governor's Emergency Relief Fund. So while you may think I didn't receive any money through the government, but if you received money from your state for educational purposes, that in fact could be subject to the single audit requirement. And then, from an auditing standpoint, they also stated there could be money coming from multiple sources. If you're an you're an educational organization, you've got different programs coming out there. So that money under the Education Stabilization Fund has to be looked at collectively. It's not individual buckets. You have to look at the whole pot of money that came through those types of grants. And the last one I want to talk about quickly, because then Jason will be able to jump in and give us some maybe practical addressing the practicalities related to all this, is the Coronavirus Relief Fund. And this is another one that could be a little tricky. Oh, and it would help if I moved my slide. So this particular funding, what it did is it directed payments to state, territorial, tribal, and local governments. And then for expenditures necessary to cover the public health emergency, i.e. anything related to, the COVID-19. So the one thing they did not allow to be covered by virtue of this program is revenue replacement. So that was not allowed under the program. But the tricky part of this is, again, since the money went to states, it went to local governments, territories, and we don't have a lot of tribal institutions in Western Pennsylvania that I'm aware of. This is a place where you may have received money, again, and not known it. One of the things that you were allowed to cover were costs specifically related to the emergency. So, for example, they said cleaning. So, if you were a building and you were spending you were spending money to clean and sanitize for people that were walking in and out of the building. Those were unusual and unexpected expenses. Those would be covered. Hazard pay. So if you were, hazard pay, whether it was for your police or whether it was, possibly, again, if you have a small a nursing home or something like that, and you were paying your staff hazard pay, that could have been covered under this program. So the money, it was sort of broad as to what could be done with it. And you have to consider, again, where it could have come from. It easily could have come from the state, or could have come from even from your county, your local government. It only covered costs that were after 3/27. So if a government or an organization had costs that were in their budget prior to 3/27, those could not be, this funding could not be used to cover those costs. Again, this money is subject to the single audit requirement. And again, they give you, the cost had to be incurred from this period of time. I mean, at one point, I think it was December think it was actually November, and they were talking about you had to return some of the funding, but I think that's been changed. The governments themselves, so again, your state and local government had discretion as to how to disseminate the funding. And the most important thing you need to be aware of, as I've already said, is that you may have received a state or local grant that in fact originated under this program and not be aware that it is subject to the single audit requirements. The last one I'm going to cover very quickly is the Shuttered Venue Operators Grant. This was called, I think at one point when they talked about it a year ago, Save Our Stages. We all know that the arts community was, well, frankly, that community suffered in many different ways because you could not do live performances. So it was geared for live venues, performing arts operators, museums, theaters. This would even include maybe somebody who books production. So it's, again, a wide group of people are subject to this funding. The entity must have been in operation as of February 2020. So if you decided somewhere during the pandemic you wanted to create your little, community theater program, you cannot apply for the grant unless you were in operation prior to February 29th. The other thing with the this particular grant is it is reduced by any PPP loan proceeds received. So I think it's a 45%, you're allowed to use 45% is the number that sticks in my mind. So let's say you would have been able to be eligible for $500,000. They're going to reduce that by whatever proceeds you receive from PPP to determine how much you can have. Also, once you apply for the SVOG grant, so let's say you have not applied for PPP money or PPP2, once you apply for the SVOG grant, you cannot apply for PPP. And this particular grant was specifically stated, it is subject to the single audit. Secondly, for-profits will also be impacted by this. So again, this is where it's sort of changing. At first it said they would be subject to single audit, then it was possibly program audit, or just a regular financial statement audit. So again, go to the SBA website. There's a 41-page FAQ on this particular grant. And if you feel that there's a possibility that you would be subject to this, you're going to want to go back, look at the FAQs, and make a determination as to whether, what you need to do in the future, especially if you are a for-profit, because this is all going to be foreign to anybody that runs in a for-profit environment.
And I'm going to turn off the next poll here. We got some hopefuls.
I think people are a little bit more optimistic than I am, I think.
Well, I thought they were going to have a big win the other night, so that goes to show what I know about hockey.
Keep the puck out of the goalie's hand. So I'm gonna wrap things up here by talking about audit considerations with respect to all the things that we've talked about so far and the different funding sources and things like that, which can be a little bit confusing. But I think a lot of it really just boils down to documentation and understanding. Robin touched on this in a couple of different situations where the funding was fast and furious, is what we referred to earlier, is money was coming in or being made available from many different sources or resources that you may not have already been familiar with. And depending on your role within your organization, hopefully there was enough communication going on for you to understand where the money was coming from. But certainly in some situations, if you have a development department that's different than the accounting department, money may have been coming in, and if you were not communicating effectively or in a timely manner, you may not know where that money came from. So that's why it's important at, some of our larger nonprofit organizations for there to be good connection between upper level management and the development department, but also with the financial reporting and accounting department to make sure that everyone's on the same page and totally understands where the money came from and what programs it came from. And like Robin mentioned, you may be receiving county or municipal or state funds. That doesn't mean that that was where the funding originated from. It could have originated from a federal program in one of these new programs that Robin discussed. And it's important to understand where that money originated from and if it does have a single audit requirement. So whenever there's a question about that, it's important to go back to the funding source and just ask the question, is this federal funding? We need to understand if we're subject to a single audit and what compliance requirements that we have. So if it wasn't clear, it's important that you do your due diligence and research to make sure you have a clear picture of where that money came from. So that goes right in line with bullet point number 1 here is document all funding related to the pandemic. So existing funding, you probably knew where it was coming from, but if you had any new funding coming in this year, you need to make sure you understand what the source was. But even with some of your existing funding, it may have been coming in through an existing county program, but that money that came in from the county could have been coming in from a different source federally. So again, it just is important that if you have, for example, county contracts, that you're interacting with those counties, and they should be confirming to you whether the source of their funds was local, state, or federal, or otherwise, foundation related. And if they do report federal funding to you, you need to accumulate all of that information and determine if you've surpassed that $750,000 limit that we talked about. And in addition to understanding where the money came from, accumulating all that documentation related to funding, you also need to look at funding requirements and restrictions. And that more goes into how and when can this money be spent. And that's just a very important thing. I mean, as auditors, that's what we're looking at when we come in and perform our audits is not just where did this money come from, but what are you allowed to use it on? And that doesn't just relate to federal funding. We spent a lot of time today talking about specifically federal funding sources, but there were also, as Robin alluded to at the beginning, individuals, foundations, corporate entities, and other organizations that were stepping up and actually providing additional funding to organizations that they believed in or that were in need. And so it's important to understand what restrictions we have there. So for the remainder of this presentation, we're not just going to be talking about federal funding. We're going to be talking about all funding in general and making sure that you understand, where the money came from and what the restrictions were. And as I mentioned, work closely with your development department to understand, if you run a report out of if you have fundraising or development software like Donor Pro or Razor's Edge, if you run a report there, first would be to make sure it agrees to your financial statements, but also look through there and see if there are any large contributions that appeared to have come in, and it might be worthwhile to go back to your development department and make sure that letters and documentation are on hand from those donors and peruse those to make sure that there's no restrictions. It's possible that donors were giving you unrestricted monies in prior years, but may have placed a restriction on it in 2020/2021, saying this should be used for paying salaries of people or keeping people employed or related to PPE or other COVID-related matters. So again, it's important to just understand where that money came from. And as Robin mentioned before, when it relates to federal funding, you need to go back to the federal agency publications to understand some of those stipulations and restrictions. Certainly going to the OMB compliance supplement is important, but we need to be going back to those federal agencies that the money originated from to understand what, if any, restrictions there are. All right, we're going to go to another poll-in question here real quick.
We're off. I'm waiting for a while.
Okay.
All right. What we're going to talk about next is expenditures, and that obviously goes hand in hand with the prior slide, with the revenues that are coming in. But we need to ensure that we understand any restrictions on the grants or contributions and whether or not those restrictions have been met. And I alluded to that when we were talking about understanding the sources of the monies on the prior slide. Robin also mentioned earlier that not only are we worried about or looking at new funding and contributions that you were either notified of or actually received in 2020 and 21, but also what about monies that had been received in prior years that hadn't been expended yet and were sitting in donor restricted funds on your within your net assets. It's also possible that some of those pre-existing restrictions may have been waived or lifted during 2020 or 2021. So it's important to know that, because if that is the case, you can reflect those prior restricted net assets as released from restriction and used for general operations. You may have had a capital expenditure project that you were looking at in prior years and received a large donation for, and that donor recognized in 2020 or 2021 that that money could better be used to keep the organization afloat and may have waived that restriction. If that is the case, again, I'm going to keep harping on documentation. You need to make sure that you fully document that, the waiving of that restriction, both in terms of a letter or an email, anything from that donor that's going to support that release from restriction. It should be in your board minutes. It should be documented very thoroughly internally, not just for the auditors, but for internal purposes too. So it's important to be keeping an eye on those things and documenting that information. Additionally, going through the monies that are received and the funding that was received, understanding if any of it was COVID specific grants. So I have a number of nonprofits that I serve from an audit capacity that receive specific funding related to COVID research or COVID reporting or just general COVID related issues. It's important to understand what aspects of COVID can be covered by that funding and essentially what is allowable in terms of the use of those funds. And you don't want to be stretching or twisting the wording of those restrictions in order to use more of that money, because that can come back on the organization. Another thing that we haven't touched on much, but Robin did mention earlier, is the forgiveness of the PPP loans. So that doesn't necessarily relate to restricted contributions and releases of restrictions, but the PPP loan forgiveness does go back to that same allowable expense and compliance topic of the bouncing ball that has been the loan forgiveness application process. What was the window? Was it 8 weeks? Was it 24 weeks? What expenses were allowable under the PPP loan forgiveness? So some organizations applied early for forgiveness back in maybe the fall or even earlier, as soon as those portals were opened by the lenders and by the SBA. And in a lot of cases, I think most of those organizations already felt confident that they were going to have full forgiveness. Some organizations that maybe didn't feel so confident waited to apply, which I think worked out for a lot of organizations, because as time went by, the SBA loosened some of those stipulations and restrictions. So for some organizations that applied early and maybe weren't recognizing full forgiveness, had they waited, maybe could have had more of those loans forgiven. So from our polling question earlier, it seemed like, I think it was half of those in attendance had already applied. Some it wasn't applicable yet, but there's still a fair number of people out there in our audience today and just in general that haven't applied yet. So certainly be looking at what those most up-to-date requirements are for PPP loan forgiveness and what those stipulations are. And again, if you have any questions on that and you'd like to talk to someone, feel free to reach out to any one of your contacts at GYF, and if we can't answer your question, we can at least put you in touch with someone who can. And then the last thing here is not to forget about other agency or grantor requirements. I think we've talked about that with regard to foundation donations, individual donations, corporate donations, just knowing what those requirements are. In some cases, if it's a very sizable gift, maybe you haven't had a financial statement audit in the past, but they may require a financial statement audit or a program audit or a review of some sort. So while you may be excited to accept those funds from a new source, you want to be looking through the communications and the contracts or letters to make sure you understand what are we getting ourselves into. It's great to have this money, but now what do we need to do in order to respond to the grantor? Some audit considerations from a planning perspective. A lot of what I talked about on the last couple slides are important from an internal standpoint, but also from an external standpoint from working with the auditors. You may have already had or will be having planning meetings with your auditors. It's important to talk about any new funding sources so that there are no surprises, either from the client side of things or from the auditor side of things during the audit. If the auditor has time to look at those funding sources and maybe see copies of those agreements or some of the letters that maybe you aren't so sure about, it's best to do that prior to the audit starting so that there's not out of scope time or any surprises during the process of the audit. So reach out to your auditors or accountants and talk to them about what new funding sources you had during the year, what questions, if any, you do have if something isn't clear in terms of the single audit requirements or any other compliance requirement. Internal control processes related to the funded grants are also important as part of a single audit. If a single audit is new to your organization because you received certain funding, a big part of a single audit report focuses on internal controls of the organization and specifically the internal controls related to that major program that is being audited as part of that single audit. And from a single audit perspective, when we move from having a basic nonprofit or for-profit financial statement audit to a single audit, like Robin mentioned, it kind of goes on top of your report. The front end of your report changes in terms of the opinion letter, and the back end of the report changes because you're adding a lot of the single audit letters and the CFA and any other reports that are required for that. But the middle of your financial statement stays the same. It's still your basic internal financials, but it's important to realize that a big part of the additional information is some additional required testing as part of the audit to make sure we understand where the money came from and where it was going to, and that those expenses were allowable, looking at the controls around the expenditure of those federal funds. So it's just important to be communicating those things to your auditors in advance of the audit starting. In terms of clarifying the reporting deadlines, Robin had alluded to this before, and there's actually a slide towards, I believe it's the very last slide that you'll see in our deck that has the summary of the COVID-19 related deadline extensions for audited financial statements. So for years that ended June 30th, 2020, the single audit deadline was March 31st of 2021. That's extended to September 30th of 2021. And you can see that for years ending June 30, 2021, the deadline would have been March 31st of next year, 2022, but it's actually been extended to September 30th of 2022. So it gives you some additional time to be considering these things, pulling these things together, and make sure everyone, both internally at your organization and the auditors, are all on the same page in terms of knowing what's expected and the scope of that work.
Okay, we have one more polling question before
Sure.
you do your fast recap. Right, one more?
Final one.
All right, so it seems like half of the people in attendance today are looking at a single audit. I would love to have a follow-up question there in terms of how many organizations will be new to having a single audit. Hopefully for your own sake, that 51% are people that already have been through them before, but if not, and you have any questions regarding what you're in for, please certainly reach out to us with any questions that you might have. In terms of recap and reminders, the biggest thing that we talked about today, or one of the biggest things, is documentation. Document all of your funding and make sure you have everything filed away in a way that you can locate those, the support for the funding that you received, and assess the reporting requirements of that. If you feel like you're in the dark in terms of where any of your funding came from, work with your development departments internally if you have one. If not, and you're the one responsible for the reporting and things, it's important to go out to those funding sources to just clarify, to understand where that money originated from. If it was coming from a county, state, or local government, you want to know, did this come from a federal source? And again, you may be far away from that $750,000 threshold. And if that's the case, then I think your level of risk and your level of concern certainly comes down. But if you previously haven't been at that 750 mark and you think you may have reached it, it becomes imperative that you're, assessing that with your management internally or with the funding sources. And again, accumulating that documentation for internal purposes and also for audit purposes is important, and asking questions early, whether it be of, like I mentioned, the funding sources, the development department, your accountants, your auditors, bookkeepers, whoever that may be, to make sure that you have everything squared away and figured out before you have to do your year-end reporting and potentially any single audit reporting.
Jason, we have a question.
Sure.
The question is, can we have just a program audit instead of a full organization single audit?
Certainly, that can happen. Now, if you're over the $750,000 threshold, you're going to have a single audit. But there are certain programs and certain funding sources that may only require a program audit, but typically, I believe, that's going to be when you're under that $750,000 limit. I think once you surpass the 750, you don't have a choice in terms of single audit or not. And just for purposes of some additional resources, Robin had mentioned these earlier. The next slide in the slide deck are references to the compliance supplement and the addendum, and the GAQC summary of the COVID-19 related deadline extensions. And then there's a chart on the back there that I had referred to earlier. So if Robin, you don't have anything else to add, I think that completes things for the day. Certainly, if there are any other questions that people have in the audience that want to share them in the chat, we can certainly stick around. Sure. All right. Well, not seeing any further comments, from everyone in the room and everyone at GYF, we want to thank you for attending. We appreciate being able to share this information with you, and we thank you for attending. And if you have any questions at all, don't hesitate to reach out to us. You can find Robin, Megan, and I, all of our contact information was, I believe, on the first slide, but also on the GYF website. So please don't hesitate to reach out, and look forward to future nonprofit seminars. So watch out for emails for future events that will be coming up or on the GYF calendar on our website.